So, Janet, we're highlighting two of the Mag 7 names that had strong performances yesterday, Meta and Tesla. But I want to ask you, I think this is a debate on Wall Street right now. The market's expected to continue to rally throughout the end of the year. That's kind of the consensus right now. What's the best way to play that rally? Is it the Mag 7 or is it some of those cyclical names? When you look at the S&P equal weight and the S&P, they're trading pretty much neck and neck since the election.
Hi, Frank. Yeah, I think this is an interesting question. I think there's still a lot of debate around it. My sense is that if the Fed continues to cut, if the U.S. data continues to be robust, I think we'll get full update from Friday's non-farm payroll. If there's still this really Goldilocks scenario, I do think that the U.S. equity market rally can really spread across to smaller and mid-cap stocks. Now, we have already seen a pretty strong rally in the mid-cap and small caps. So I think it's a question of whether that can intensify going forward. And I do think that there is a high chance that it can be the case, because I think most importantly, what we are enthusiastic about is the animal spirits. And I think that really would help to support the more cyclically adjusted and high beta stocks in the area.
So, Janet, let me ask you, it seems like you're saying something that may be a little bit conflicting here. You're saying there's just strong animal spirits in the market, but at the same time, you're saying some parts of the market need that rate cut. Isn't some of the rally just based on what you're calling animal spirits and also a lot of confidence in the new administration's policies and the strength of the economy? So if we have such a strong economy, why do we also need the rate cuts?
Yeah, absolutely. So I think the case is that the current interest rate environment is still restrictive. So if you think about why interest rates were raised in the first place, it's because of high inflation. But inflation is still broadly likely to slow down, because we understand that the rent component is the biggest part of that services inflation, and there's high confidence it is slowing down. So why do you need interest rate at such elevated level? I think that's really the point that the Fed is trying to make as well. So I think broadly speaking, right, if we still have an easing cycle environment, it just really helps additionally to that animal spirit environment, if that makes sense. It's really a multiple catalysts happening at the same time. So I guess it just really helps at the margin as well.
Okay. So again, Waller says he's leaning towards a cut. The expectation is for a cut. If we do get that cut, or continue to have confidence in that cut, what do you think about these cyclical names, specifically the financials? If you look at the financials, they've had a big run up since the election. Would you continue to put money in that cyclical sector in particular?
I think financials should continue to do well. Of course, I think slower interest rate is not particularly the best news for banks. But at the same time, what I talk about is the animal spirit. I think U.S. investment banks are a prime beneficiary of that, because we know that, for example, the deal making, M&A, capital market activity, there is a lot of backlog given interest rates were high, and then the animal spirit wasn't there before. But I think that really would help those big investment banks if we do see more of those activity. And of course, a strong economy, continual credit growth, etc., that would be great as well. So I would say cyclical sectors like industrial, which will benefit from domestic reshoring and investment in manufacturing capacity. Okay. Financials, I think big techs, of course, will continue to benefit.
Okay. One last question. Our Jim Cramer, who watches the show, by the way, we kind of hit on the best performing stocks in the S&P in November. He came out with what he thinks are going to be the best performing stocks throughout the rest of this year. Obviously, 1 month left. Some of those names are some of the best performing stocks in November. He said just kind of ride the winners. Here's some of the other names. I kind of just put a variety of names from his top 10 stocks that he thinks are going to do good in December. When you look at this list, Palantir, best performing stock in the S&P in November, EQT, an energy company, McKesson in the healthcare space, Warner Brothers Discovery, obviously a streaming media company. Any of these names that you particularly like, or sectors that these are in that you like going into the last month of the year?
Well, first of all, I'm not a stock analyst, so I really can't provide a comment on those stocks that we don't actually cover. But I would say, in general, I think artificial intelligence is still going to be a main focus. I think the first stage is about the infrastructure build up, about the chips. But I think the next stage, perhaps more so next year, is going to be finding out who the winner is on the monetization of AI applications, for example. So I would say, the area that utilizes AI to monetize, commercialize, would probably be a beneficiary. But of course, it is very hard to pick the right winner there.